Introduction. Hello and welcome to our channel, where we provide you with the latest investment news and insights. In this video, we will discuss the Warren Buffett portfolio for the year 2023. Warren Buffett, also known as the Oracle of Omaha, is widely regarded as one of the greatest investors of all time. He is the chairman and CEO of Berkshire Hathaway, a holding company that invests in various sectors. Buffett has an impressive track record of outperforming the market, and his investment decisions are closely watched by investors worldwide. In this video, we will analyze 4 of the top holdings in Warren Buffett's portfolio for 2023. Apple. Let's start with Apple, which makes up 41.4% of Warren Buffett's invested assets. Although Buffett was a net seller of equities during the fourth quarter, he continued to add to his position in Apple, which comprises close to $140 billion of Berkshire Hathaway's $338 billion investment portfolio. Apple is viewed as a pillar investment for Berkshire because of its branding power, incredible cash flow, and considerable capital return program. Apple has an exceptionally loyal customer base and is currently the leading provider of smartphones in the US by a considerable amount. On top of attracting users with its physical products, CEO Tim Cook is overseeing a steady transformation of Apple into a services-oriented company. Buffett loves publicly traded companies that reward their patient shareholders, and Apple has repurchased well over $550 billion worth of its common stock over the past decade, and it's parsing out one of the largest nominal dollar dividends each year, almost $14.6 billion. Bank of America. Moving on to Bank of America, which is Buffett's undisputed favorite bank stock and makes up 10.8% of his invested assets. The reason Buffett and his investing team favor bank stocks is because they're cyclical and can take advantage of a simple numbers game that favors long-term investors. You see, even though recessions are inevitable, they're usually short-lived. Comparatively, economic expansions can go on for years. This allows banks to grow their loans and deposits and generate higher income over time. What makes Bank of America special is its interest rate sensitivity. With the Fed combating historically high inflation by raising interest rates, B of A is benefiting from higher interest rates on its outstanding variable rate loans. The result was a $3.3 billion boost to net interest income during the fourth quarter from the prior year period. Keep in mind, the nation's central bank isn't done with this rate hiking cycle yet, either. Chevron. Over the past year, Buffett has become a big fan of the energy sector. That's why you've seen energy stock Chevron grow into Berkshire Hathaway's third largest position, making up 8.1% of invested assets. The logic behind having a $27 billion position in Chevron is that energy commodity prices will remain elevated for years to come. A lot of investors are focused on Russia's invasion of Ukraine and what that might do to Europe's energy supply needs. But the bigger concern is what 3 years of reduced capital investment tied to COVID-19 has done to the global energy supply chain. Although warmer weather has crushed the price of natural gas, supply constraints are buoying crude oil well above its average in recent years. Chevron has also done an excellent job of strengthening its balance sheet and rewarding its shareholders. Last year, Chevron reduced its net debt from $25.7 billion to $5.4 billion. Further, the company increased its base annual payout for the 36th consecutive year in January 2023, and its board authorized a share buyback totaling as much as $75 billion. American Express. This year marks the 30th consecutive year credit services provider American Express is. 1. Coca-Cola. 7.5% of invested assets. Coca-Cola, Co. -0.46%, has been a mainstay in the Berkshire Hathaway portfolio for decades, and it remains a top holding in 2023. 1. Although the company's sales growth has been sluggish over the past few years, it still commands one of the most recognizable brands in the world. 1. Coca-Cola also benefits from a well-diversified product lineup that includes juices, teas, energy drinks, and more. Another key factor in Buffett's love affair with Coca-Cola is the company's dividend. Coca-Cola has increased its annual payout for 59 consecutive years, making it one of the most dependable dividend-paying stocks in the world. Even during tough economic times, Coca-Cola's management has found a way to increase its dividend, which is something that Buffett highly values. 1. Moody's. 7.2% of invested assets. Finally, rounding out the top 6 holdings for Berkshire Hathaway is credit rating agency Moody's, MCO -2.55%. 1. Although Buffett didn't make his fortune by investing in tech stocks or cutting-edge growth companies, he does have a penchant for businesses with high barriers to entry. 1. Credit rating agencies like Moody's have those barriers thanks to their reputation and regulatory approvals, which gives them a duopoly with S&P Global, SPGI. What makes Moody's particularly attractive is its role as a middleman between lenders and borrowers. The company generates revenue by rating the creditworthiness of borrowers and then selling that information to lenders. During a period of low interest rates, there's a greater incentive for borrowers to take out loans. This has led to record levels of debt issuance and credit rating activity, which is good news for Moody's. Furthermore, Moody's has a history of producing strong margins and generating significant cash flow. This has allowed the company to repurchase shares and increase its dividend over time, which is something that Buffett loves to see.